Today, I'm joined by Peter Doyle, the CEO of Consult Group Worldwide. Can you tell us a little bit who was Peter before the success?
I'm not your typical investments and finance guy. I've come from a music industry career.
Can you explain us, like if I was a 12 years old little girl, what do you do exactly?
When people ask me what I do, my reflex answer is as little as possible.
Do you have a specific industry? Do you have a specific amount? Who are your typical clients?
Portfolio managers, multi and single family offices, and some private wealth managers as well.
What are the industry since 2026 and the geopolitical situation still willing to raise funds?
I think those days are gone. They're dead. People don't want to lock up capital for longer than a year now. Everything is short and compressed. YouTube Reels, Instagram Shorts. People can think in shorter terms just in their daily life.
Peter, is AI one of the biggest that you take project on?
No, it's not actually. We use AI in our business and it's great.
You have capital advisor, you have people who's going to take the project as is and basically find investor for. Especially when you start at 50 million and institutional investment, it's definitely your name that is on the game. What advice will you give?
I think my biggest advice is to never give up.
Welcome to the DealMaker show. Today, I'm joined by Peter Doyle, the CEO of Consult Group Worldwide, and a capital operator who has raised over $900 million to date and planning to raise $1 billion before March. Peter operates at scale on the side of capital where decisions are actually made, structuring, raising, and deploying large amounts of capital across complex transactions. I wanted him on the DealMaker show because he understands what it really takes to raise serious capital, what investors look for beyond the pitch deck, and why very few founders ever reach this level. Welcome, Peter. How are you?
I'm very well. Thank you for having me. Appreciate being here.
So, Peter, let's go straight to the point.
Sure.
So you're very well known now with your successful company, but can you tell us a little bit who was Peter before the success?
I'm not your typical investments and finance guy. My career isn't traditional in any sense. I've come from a music industry career. My background was that I was actually an international DJ and music producer since the age of 17. So I very much traveled the world in a completely unconnected career. And at the age of 38, I moved here to Dubai. I was actually here DJing a launch party for a mix CD that I had.
Amazing.
And I met some friends here who saw my big poster in Virgin Records. And to cut a very long story short, I hadn't seen them for about 10 years. We reconnected. They were setting up an asset management company. They were aware that I had a sort of small interest in investments. My father had passed away and left me some inheritance money. My kids were really small at the time, so I was doing a little bit of dabbling into investments. They then offered me a job to come and work for their asset management company in 2011. I took that position there for about 3 years. In 2012, I actually then pivoted a little bit and set up my own company. And then I went full pelt into CGW around the start of 2013.
Wow, that's amazing. So definitely, I'm sure that everyone is the first time we're seeing an ex-DJ being in the investment and capital raising world. So I'm sure the audience is very eager to understand what is it about raising funds in Dubai, and can you explain us, if I was a 12 years old little girl, what do you do exactly?
Well, when people ask me what I do, my reflex answer is as little as possible. That's what I say to my kids. What I do is I help SMEs that are looking to expand or grow their companies bigger. And we would just go out and create a solution that will help them raise the capital to help them make their project bigger. That's it in a nutshell. For a 12-year-old.
And let's get deeper on this. Do you have a specific industry? Do you have a specific amount? Who are your typical clients?
Yeah, good question. So we're sector agnostic. over our nearly 14.5-year career now, I think we've raised capital for pretty much every asset class and every sector of industry known to man. Real estate, green energy, renewables, mining, litigation financing, funding, oil and gas. We've done it all.
Wow,
yeah,
that's
we've
amazing.
really spread quite far and wide. And then different asset classes from listed funds, bonds, loan notes, private equity, private credit, which is our mainstream now. So we've pretty much run the whole gambit of different sectors and different asset classes. So it's given us, I'd like to think, an encyclopedic knowledge about how investments work and the different structures, but also the different nuances for each structure. Because eventually you're going to be raising capital for a different solution that could be in a different jurisdiction. Like, for example, we raised capital for a green energy project once in Sweden. So that was very much sort of Euro-focused. So again, it was nuanced towards that. It was biased towards that. So we have to then reverse engineer the solution or the structure to suit the networks of guys that we've got here in Dubai, in the Far East, into Europe itself, Latin America, because we're well placed. I think we've got agents and partners in every quadrant of the world.
Wow, every continent?
Except Greenland and Antarctica.
Okay. I don't think they're raising so much project there. That's amazing. So you basically a really global company who... my understanding is that you mostly raise projects that make sense with the philosophy of your company. Can you tell us a little bit about how do you take those projects, right? Because everyone is raising in Dubai, everyone wants to raise money.
Sure.
And I'm sure that definitely you say more no than yes, but what is your typical, very shortly, like checklist? Why will you choose this project over another?
So our checklist is a big laundry list.
Yeah.
There is, I think, again, after sort of nearly 15 years, you get to be able to skim read a pitch deck. Like I get 4 or 5 a week and I look at them and think, no, that's not for us. Why? Because you become very adept at taking on a solution and then reverse engineering it in your mind to create a distribution strategy. Like if somebody came to me today now and said, look, I've got the best thing in the world because they believe in their project, I would be able to look at it and go, could I sell it? Where would I sell it? What kind of capital would I be able to raise? What kind of structure does it need to be? So these are all the components that we consider before we even say yes to anything. Even then, when we found something that will identify a project that could be good for a capital raise, we look for a minimum of around 50 million. We don't look for anything smaller than that because we are semi-institutional with what we do. Yeah. We don't work with any startups because that actually presents an inherent risk because it's companies too new. It might not be income producing. So again, these are all the criteria we look because we know straight away we're going to be able to present this to some of our networks in the Far East, for example. We know that they're risk adverse, they're conservative. Same as the guys in Switzerland. They want to see projects that are already operating, they're already producing income because you've de-risked it or mitigated some of the risk. So these are little facets of components that we look to be able to tick boxes with when we consider or identify a project, and then we go off to do the structuring. So every project that we take on is wholly unique. There's never a one-size-fits-all. And I think with market sentiment, we have to adapt in real time at all times. I think that's really important. I think, again, if we know that there's an appetite in certain jurisdictions, we would probably structure it with that particular jurisdiction in mind. So, for example, I use Switzerland. We've got a big network in Switzerland. There's a lot of guys that raise capital in Switzerland. But Switzerland is very, very conservative, and it's extremely nuanced. So, again, you've kind of got to go in with understanding your different avatars that we deal with. So, for example, in Switzerland, we deal with asset managers, portfolio managers, multi and single family offices, and some private wealth managers as well. So we try to reverse engineer the structure to be a bit of a catch-all for all of those different avatars that we deal with. That's
amazing. So basically, for people who are not 100% in this industry, it's really about the expertise of matchmaking the right project with the right investors and to see if in the mix it's matching the current political situation, because some project may be good but not yet ready for the society or for investors to invest on. And so you were saying that you do institutional. Maybe you can explain what does it mean for people, like what's the difference between institutional and non-institutional, because I'm sure everyone heard that, but I'm not sure if people understand what it means.
Yeah, good question. So with institutional type investors, I would probably, for CGW and for my network, I'll give you my answer, which is family offices, asset managers that are managing portfolios of 100 million plus. We've got a few elite family offices in the Far East. They don't look at projects of anything under 100 million. So for an institutional, we've also got a few DFMs, discretionary fund managers, some funds of funds, and some well-known companies that actually make private investments. They've got a lot of capital to deploy. Obviously, I can't mention them, but we've done some institutional investments, structuring and raising for some very big well-known entities out there in the finance and investment world. In terms of how we structure the projects for these guys, we ensure that when they come to us, that they know that we already have what they're looking for. And I think it's just like you say, the matchmaking and then just joining the dots to connect to make sure, A, it's a good fit. The criteria is there. We're not trying to shoehorn in a product here. We're trying to create a solution that is catering for the demand for what they're looking for. Because I think, use your example about Dubai, everybody's got something to sell here. Yeah. Everybody's a hustler. And everybody's got the next best thing that you've ever seen, right?
Everyone is Elon Musk in Dubai.
It's so true. Everyone has the next best thing here in Dubai. But I think that's the thing, it's to cut through the noise. And that's where I think you need a really rigid filter system. Yeah. And, after 15 years, I'm very adept at being able to just read projects straight away, and I'll know if I can raise capital for it or not. 99% of the times, I either don't have the bandwidth or I just don't have the capacity to take on something that's too similar to something else that might have failed. Even if it is a better structure, I preserve my integrity, my reputation and my sanity, because I need them to be able to grow the business and drive the business for the current mandates that we're working on. I think similarly, I wouldn't take on too many mandates because you can actually dilute your own capital raising pool. Yeah. And I think there's a lot of people in the capital raising game you've probably seen. Yeah. They've got all this and they've got all this.
Agree.
They've got too many projects. There's no singular focus. And I think that's important.
Yeah, I mean, raising project with a minimum of 50 million, you can definitely not take more than a handful. Yeah. And that's very, very interesting what you said. Since we're in Dubai and even you raise globally, can you give some tips to the audience in terms of what type of, you say a little bit already what type of investor you have, but what are the industry since 2026 and the geopolitical situation and all the economic situation as well? What are the, let's say, the 3 top industry where investors are still willing to raise funds without obviously having any confidential information, but just like in terms of industry?
So I've got quite a big answer for this, so I'm going to go around the houses, so just indulge me. I think if you look at how the markets and global sentiment has shifted since the end of the pandemic. So I think since 2022, 23, everybody around the world, every mindset of investors has shifted significantly. Whether it's in the Far East, the Middle East, Latin America, Europe, wherever, everybody's mindset has now shifted. And I think one thing that's fundamental to this is the pandemic taught us to expect the unexpected. Now, when you consider that, it means that people's now investment sort of horizons and their goals are, they don't want to lock up capital for a long time. Traditionally, a lot of fixed income solutions were sort of 3, 4 to 5 years if it was a listed bond. I think those days are gone. They're dead. People don't want to lock up capital for longer than a year now. So I think the mindset, everything's come down to a really short, compressed horizon of maybe 1 year or less. And I think that because investors can now think in shorter investment cycles, that shift, I think a lot of product issuers haven't actually really considered, because for their projects, they might need to stretch that out for 2, 3 or 4, 5 years, right? But I don't think they're the ones that are going to be successful. I think if you can offer an investor in any type of avatar that we deal with, asset managers, portfolio managers, family offices, DFMs, etc., they all love short-term solutions now. And I think the reason for that is, again, I blame it on the pandemic, but also I think how we live our lives today in society, everything is short and compressed. You know, YouTube Reels, Instagram Shorts. People can think in shorter terms just in their daily life. So if you think they think like that naturally, organically in everyday life, that mindset transposes across to investments and investment solutions, investment horizons. So I think there's been a global shift now. So I think people now want to invest and lock up money for a shorter period of time because they've become less risk tolerant. They want to just feel safe and secure, knowing that if they need to access their capital in a shorter time, they can get in and out. And it allows the investors of any description to be a lot more nimble and fluid in their portfolio. It allows them to plan for the unexpected. I think, again, that's critical here. I think people that traditionally invest in alternative solutions are preferring to just be able to access their cash or access their capital more readily. I think that's the fundamental shift there.
Peter, is AI one of the biggest vertical that you take project on?
No, it's not actually.
Oh.
No, it's not an area we invest into. We use AI in our business, and it's great. It's something we integrate within CGW's business. I think it's not necessarily a fad. I think there is just a bit of oversaturation in that sector now. Everybody's got the next AI thing. It's never really been an area of CGW's interest because we're kind of more focused on fixed income solutions.
Okay.
I like solutions that create an income and can pay investors an income. And I think for that model to work, it has to be an already established business of some description. It has to be something there that's got an asset that can generate yield and pay investors yield. We have done some private equity raises, which I think an AI investment, would be more on that PE, private credit sort of venture capital space. But we're more proponents of the fixed income solutions. I think just given our reputation over the years, we're known for providing fixed income solutions in many different industry sectors. But we've done a fair bit of private equity over the years as well.
Okay. Yeah. So any advice you can give to founders that are looking to raise 50 million and plus in terms of which industry is like booming maybe? Mm-hmm. Because my understanding is now AI is super saturated. Yeah. And even people who are in AI are now investing in real estate and more like fixed income, stable industry where there is no way to basically just crash. Because you can work on AI for 2 years, spend 20 mil, and then someone has done it before you, and you just go to the bin. So any industry that you're seeing booming since the beginning of the year?
I think the private credit sector is absolutely on fire right now. Okay. That's definitely something that we've witnessed ourselves. It caught me off guard a little bit, if I'm honest. Not just that, just the cost of capital is unsustainable. Yeah. The
business model cannot the go-to-market.
Grow too quickly.
It's not working.
Yeah, grow too quickly. Cost of capital is unsustainable. The assets there, the debt service coverage ratio is all whacked, it's all off, and we just cannot then make it work. So rather than taking it out to market and raise capital for it, because we could still do that, I'd rather say, do you know what? No thanks, this isn't for CGW. Yeah. But by doing that, it allows us to exercise a quality control muscle. It means everything that we've got that we've taken to market, we've done a huge amount of due diligence on it. It also means that we're able to put our best foot forward because we've done this deconstruction and reconstruction. We've been able to put our global, I guess, sort of touch points from the networks that we've built and the guys we're in contact with regularly, we've got all this data, we've got all this input that we can put into that structure in real time. So a structure that we might have done a year ago wouldn't work today. And all the guys we've spoken to and seen in the last year, we've now got a new realm of, I guess, influence where we can shape that into the new structure and saying, look, the 2025 structure looked like this, but the 2026 structure looks like this. That's a year apart.
Yeah.
You know, and I think a lot of people, a lot of issuers still try to structure stuff that's 2020 or 2018, and those structures don't work anymore.
Yes, it's a very interesting and smart way of working, especially on the capital raising world, where you have like capital advisor, you have people who's going to take the project as is and basically find investor for. So it's definitely a big differentiation, and well done for doing that, because especially when you start at 50 million and institutional investment, it's definitely your name that is on the game. And there's something I always love to ask my guests, because I strongly believe that we learn from our biggest mistake, 100%. And we usually, we raise like the phoenix when we are at the bottom, and this is really where we can see who we are.
Yeah.
And I know, obviously, you had a very specific life story about that, but I really want you to tell us, like, advise our guests, like, when you are down, what makes you raise from the dead, if we can say.
Phoenix from the flames,
yeah,
right?
Exactly. And what advice will you give? Maybe, we have some founders that are like scratching their head because they're like, it's not working, there's no one giving me money. Like the entrepreneur, and we are both entrepreneur at heart. Even we're doing the capital raising, is still like, we need client, we need to raise the money. So the stress is like never ending. So what advice can you give people that are at this stage where, they feel nothing is working as it is, they're burning cash?
Yeah. I think my biggest advice is to never give up. But I think even that's an easy one to say. I think the best piece of advice I could say to any founders is to understand you might have the best idea, you might be passionate about your project and think it's got to always be about you, but it doesn't. It's better to have a smaller piece of a bigger pie and bring in teams and bring in people that can help you grow and scale. Yes, it might help you dilute your shares, you might not make as much money, but you can also make more if you bring in the right teams. So I think what I'd say in closing on that statement is to always be open to bringing in other teams, and don't just try and all make it about you. I've seen so many people fail over the years because they've tried to control their whole holding of whatever their equity position is. Sometimes it's actually better to relinquish some of that holding, and as I say, a smaller piece of a bigger pie. I think that's just the mindset that goes on, because if you look at a lot of young entrepreneurs who haven't had the life experiences that we've had, that's another thing. They're inexperienced in life.
Yeah.
There's a lot of VC funds out there that won't even invest in a company unless the founder has failed 2 or 3 times. They want to see that you failed a few times because you've had that chutzpah to be able to pick yourself up again, dust yourself down, and you go again. That's what they're looking for. But I think to just go back to the founders there, it is tough. It's a lonely journey. But you've got to be open to the fact that there are other people out there can help you scale and grow better than what you think you can. So you need to remove the ego. I think that's the main thing there.
Removing the ego.
Yeah.
Thank you so much, Peter. It's right on point. And you can be great at getting the idea, but executing is always the most difficult part, because you can have the great idea, but if you don't know how to execute, then it's just an idea.
Yeah.
And I think like CGW or Capital Advisor, this is basically what we do, right? We basically help company based on our market. So you do 50 million minimum investment, B2B investment banking. You help them to execute and to bring the money, because at the end, it's only the idea until you get to raise the funds. So let's talk more now about what's the future holding for CGW. What's your next 12 months plan, and how do you see your company growing in GCC over this next 12 months?
Well, I'd like to get to $1 billion before April or the end of April.
So when Peter gets to $1 billion, he's back here.
Deal. I think we've scaled dramatically at the company in the last year and a half anyway. I've moved back here to Dubai because the team are here, I'm here, and I'm traveling consistently. I think for the plans for the rest of the year is to just keep doing what we're doing and keep growing and keep scaling at a pace that allows us to just do the right thing to serve the avatars that we're dealing with. We've got a few new opportunities now that are actually more in the private credit and the sort of VC space. So I'm really keen to expand on those current opportunities. There's a very big issuer, let's call them, that we're working on a joint venture with at the moment. Obviously, I can't talk too much about that. That's work in progress. So I'll talk about it more the next time I'm on. But that's really super exciting for me. And it's something that I wasn't even thinking about doing. It's just naturally, organically, 15-year reputation, things come on your lap, you meet the right people, especially here in Dubai, and things just happen organically, and they've just taken a nice little turn there. So I'm excited about that. We're also setting up a foundation as well. That's something that's close to my heart for me and my family in terms of what we're doing with CGW. Again, I can't talk too much about that at the moment, but watch this space. And then the exciting one is we're hosting our very first event on the 14th of April at the St. Regis downtown. It's for asset managers, wealth managers, financial advisors, private bankers, all the different avatars we deal with. And it's kind of there as a bit of a education seminar. It's called the Capital Wealth Summit. It's something myself and my team have put together, and we believe that there's a lot of gaps in knowledge in terms of what certain avatars have a perception of with their clients. So what we're trying to do is be a little bit disruptive. We're trying to bring some great speakers to this event to allow them to educate some of the avatars that we deal with, along with ways that they can grow their businesses. So for example, financial advisors, IFAs, wealth managers, they're always looking for new clients and new projects in the ways that can help them grow their business. And it's symbiotic to us, because if one wins, we all win. So we're trying to help them to help themselves with our solutions, but also a whole new raft of knowledge coming from AI and some great speakers and motivators that we've been working with that are in the forefront of the private credit scene as well.
Amazing. So 9th of April at the St. Regis. 14th of April. So 14th of April, St. Regis downtown. If you are a wealth manager, a financial advisor, take your ticket. We'll put the link down, and don't miss it. So excited about the event.
Thank you very much. Hope to see you there, Nasreen, as well.
Yes, I will. So let's finish with, what advice will you give to the Gen Z? I always like to help the Gen Z. And to you have kids that are Gen Z.
Absolutely. I have a conversation with my daughter next week, who's 18. And one of the conversations we're having is actually in financial literacy. Because she turned around to me and she said, "Dad, I don't understand taxes," because she's got a part-time waitressing job now. And, she's at school in the UK, and the UK curriculums, like many curriculums globally, they don't teach financial literacy. The only way you really find out is when you go out into the world, you start a job, you start earning money. And
then you realize how much the government is taking from your paycheck.
Right. And in the UK, you know, depending on what band you're in, 20 to 45%, that's a lot of money, right? Whichever way you look at it. So I'm sitting
Especially for a half-time waitress student.
Exactly, and that's what she is. So she's trying to make ends meet herself. So she wants to sit down and obviously have a chat with Dad and talk about taxes and to try and understand what this adult world looks like.
Yeah.
But I think going back to your question, I think, advice for Gen Zs, it's that's a tough one. I don't know if I'm allowed to say this, but I would say, for my daughter and my son who are in the UK, I'd prefer them to be out here with us, but they're adults, so they can make their adult choices now. I don't have a say in the matter, really. My parenting with them's done. But I think for any other parents out there, especially if you are in the financial world, I think it's important to always teach your kids some form of financial literacy because the schools don't cover it. And I think, as parents, we work hard for our family, for our kids, and to give them a good future. So I think it's important that, when we're gone, that they understand that legacy or succession that we've left for them. And I think with Gen Z now, they think it's all about, likes and Instagram, the celebrity lifestyles. They need to be taught about the real world, what's really happening in life, how things really work. So I think it's important for us to educate our kids, to teach them how it works, why it works, and what the real deal is.
Agree. So educate your kids when they have teenager about financial literacy. Show them that, and this is the goal also of this podcast, that there is no one that I've sat with in my entire life and on this podcast especially that didn't go through very low point to then be successful. And like you mentioned, Insta, TikTok, you only see the top of the iceberg, but behind that there is a lot of work, there is a lot of consistency. And in France we say everything comes at the good time. So trust the process. Try not looking at all the Insta and maybe you have an idol, oh my God, she's beautiful, she have this, she have it all. No one have it all. It's just pretending.
No, it's right. And I think to add to that as well, I think, apart from your comments, trust in the process, there's a lot of sacrifices that are made as well. Yeah. As parents, I think there's always sacrifices that sometimes the children don't get to see or appreciate. But I think as well, I've taken all my kids, they've all joined me doing work experience. They've all flown internationally with me, all three of my kids at different times.
Amazing.
Because that was the best way that I knew how to educate them, was to take them out on the road. My son flew to Japan. My daughter flew to Dubai. My other son flew to Dubai. They've all done separate stints with Dad at work for a week.
That's amazing.
Yeah, that's the only way I could teach them what I go through, because then it makes them appreciate what I've built for them, the lifestyle that they're privileged enough to lead. But it's also taught them hard work. They've seen the late nights, the missed flights and the long hours and the phone calls and everything that goes on with it as well. So it gives them a greater understanding of what I do or what we do as parents to provide for them. And I think that's key as well.
Thank you so much, Peter, for being here and taking the time to share your journey. How people can connect with you?
So I'm on LinkedIn,
Okay.
Peter Doyle on LinkedIn. I'm on Instagram, petedoyle.co.uk, which is my personal website brand as well. We've obviously got a few other entities, Wealth Links and Consult Group Capital. And of course, we've got the Wealth Summit coming up as well.
All right. So you have a specific website for it?
That is capitalwealthsummit.com.
Okay, so all the link will be on the bio. And thank you again, Peter.
Thank you.
And shall I say I'll see you soon for the 1 billion?
Yeah.
Thank you.
Thank you. Thank you for having me.